We're going to talk about $2,000. How far would you get if you invested in 4 coins at the start of the year? Let's go. Hi everyone, welcome to the channel. If you are new, please do subscribe, slap on a like, leave a comment, and also don't forget to hit that bell button. There's a lot of people that are coming into the gates, and I want to say thank you very much for the support, the comments, the likes, and having the ability to say I've got 20,000 subscribers is somewhat pinching. Amazing. So I want to talk about the video on the screen here. You don't need to invest a lot in cryptocurrency. Here is why. I want to talk about it because ultimately I still think this, I believe this, and I'm going to put the proof in the pudding if you started at the start of this year. Now I know I'm going back in time and going over what if scenarios, but I am going to give you techniques and profit taking exit strategies and ultimately how to kind of buy these sort of dips correctly so you can kind of have some sort of process of your own essentially, okay? Now we're going to start off with 4 coins. They're going to be the Coinbase 4, the top coins on Coinbase essentially, because I'm thinking from a new point of view, a novice. The reason why I'm going with these is because they are the obvious coins. You've probably already guessed them in your head. Bitcoin, Ethereum, XRP, and Chainlink, right? When you go into Coinbase and you open it up, they are the first 4 you see, right? As a new investor, most people go to the likes of Coinbase and buy these coins. This is why I want to try and show you on this. So what we're going to do, we're going to pretend that you're a new investor and roughly show you what sort of investment you would have got if you bought at the start of the year, not including the COVID crash, because we're going to talk about that as well, and ultimately a split of $500 in each. Not a great amount, and the proof of investing is in time. Time in the market and time in the market, okay? Makes sense? Hope it does. Now, we're going to talk about certain things about altcoins, and the first thing I want to get off my chest is a lot of altcoins are still majorly down on what they've achieved in the past. Let me just put a point out there. We're going to go over the chart, and before we start the bulk of this video, and trust me on this, we'll use Ethereum as an example on this. Go to the monthly chart, zoom out a little bit, and you've already seen here, oh, hello. Now, it's crazy when you think about this. Altcoins could, now this is obviously speculation, it may never happen, but when you're thinking, are you buying something undervalued? Well, you got to think, where's it been? Why has it been there? What have they done since then? And ultimately, do your research on the asset itself. That's simple. That's not financial advice, that's just common sense. As I said in previous videos, there's a load of them over the last few weeks about researching how to buy low, where to buy coins if you want to buy them. You've got to start thinking for yourself. Don't just copy YouTubers. I'm trying to give you all the tools to kind of help you out in terms of knowing it. But the one thing that people often ask me, how much money do you need to start? And this is why this video is getting covered. And I want to show you what it would have done if you put that much in at the start of the year and what it would be now if you were a holder. Just a normal investor, a holder with some potential exit strategies if you want to pull a little bit out. Okay, so when you look at this, in my honest overall opinion, looking at the monthly chart, going from there to that bottom, which is technically there, I still believe 110% that Ethereum will eventually go higher than $500. That's kind of my own thought process. Why does it back it up? Because when I do a retracement on the monthly time frame, I know that there's a key level here, I know there's a key level here, and I know there's a key level here. Simple as that. That would indicate gains in the market potentially, even now, today, when you think about it. There's a lot of altcoins like this. So if you think about it, if a bedrock of coins that did well in 2017, in the bull run, that have still got good fundamentals, that have still got a good product, and are still developing and growing as an asset, a lot of them look like this. A lot of them look a lot worse than this, in fact, in terms of the fact that they're a lot lower and they've got a lot more upside to go. Interesting food for thought, so keep that in your head. In my opinion, Bitcoin is more risky to buy at the moment versus an altcoin. There's more upside potential to an altcoin right now, but that's for another day. Let's talk about a few things. So, as I've said, we're going to split $500 up. So the first $500, start of the year, we're going to look at Bitcoin. And we're going to basically convert the percentage growth of that very, very simply. If you bought at basically this price here, $6,800, give or take, right? Round number, okay? Simple maths. There may be some spluttering on this video because I'm not very good at maths. I'm just going to put that out there. So that will be the first buy area here, right? So essentially, the first one, now what we will do, I will make sure, there we go, that's easy. So the first one here, you know, very, very simple. We're going to go from roughly $6,800 up to the top here, which current live prices, we'll do live prices, we won't go to highs, 165%, boys and girls, 165%. Now, I want to put this food kind of process for in your head of when to eat, when not to eat, right? People say about ETFs, bonds, you know, hedge funds, stocks. People are like, oh, just put it in there, it's safer. Well, yeah, it might be safer in some ways, less volatile, but the returns are nowhere near as good. What would you rather do? Put money you can afford to lose in an ETF and make on average 7% per year, knowing that it will probably grow that much, or put money that you can afford to lose anyways into the likes of Bitcoin at a good price level. Well, this is where this video is going to go. So 165% there, which is absolutely savage on Bitcoin, right? So let's just do a little bit of mathematical sums because I'm rubbish at maths. I've already said this. So that will give you a total of 1,325. That is basically plus $600 and odd, which is absolutely savage. So that's Bitcoin, done. We'll put it all up, we'll compile it at the end and we'll have a little look at it, and then we'll go over to some potential exit strategies that you can look at. But one thing you don't do, by the way, boys and girls, don't take all your bag out, leave some in. Always take little nibbles off it, and that's one thing that I always back. The next one is obviously, you know, the next best thing realistically, if you think about it. We are looking at, oh wow, 120, let me just zoom in to make sure I get this correct. 1st of January, we're looking at roughly $127. Wow, big regrets not buying any more of this at the bottom. I don't hold any Ethereum now, by the way, just to put it out there. Moving on, that's 280%. So Ethereum's 280, which is absolutely savage. Again, back to the maths. You know, feel free to just laugh at me if you want. I mean, I don't really care. I should have really done this beforehand, but hey, why not see the process? $1,400 in profit, giving you a total of 1,900. Now, I know you're probably saying, you probably think, well, this is all what if and buts, but this is investing. You don't know what they're going to do. You do not know what, you know, future results are going to give you, but you need to do the processes right. And I'm going to explain some processes once I've calculated this, just to show you. There's a trade there if you're interested. It's kind of gone now, but, you know, one of those things. Chainlink did crazy, to be honest with you, in terms of this. We're going to current price levels again. We don't want to exaggerate the living shit out of this. Where is it? Where's January? There it is. We are looking at what, $1.60, give or take, which is absolutely savage in itself, realistically. And to current live prices right now at what, 13, oh wow, 13.70, give or take, about there, 750. Wow. So with all this, I just want to put this point out there. As you've probably seen, it's been a lot higher. It's been a lot higher than this. And then you've got this big, massive retracement, which we're going to talk about in a minute, which is why this is kind of important as well. So again, $500 plus 754%. Oh my days. That will give you top line $4,700. No, $4,200, sorry, in terms of overall. Crazy so far. And then the last one is going to be XRP, because this one is one of the other ones. Now this one had a bit more of a topsy-turvy sort of time. You can see this. This is interesting. This is why I picked these four as well. They are the top ones on TradingView anyways. TradingView, sorry. Coinbase. So as you can see here, 18 cents, give or take, which is absolutely crazy when you think about it, because it went really, really high, then it dumped really, really low, and then it carried on its merry way again with the COVID crash. But a lot of people will get probably a bit disgruntled with that. But in terms of this, overall current price levels, it is still a gain. This one again, we're looking at 63%. So obviously this is year to now. So the start of the year to now. And the one thing I want to make sure that you don't get confused is that COVID crash. I want to talk about it in a minute and why those sort of events are really interesting and why you should probably always be prepared for those sort of situations, especially in crypto. So let me just add up that last bit there. Another load of profit, happy days. So this is absolutely savage realistically when you think about it. So they're the four done. But I want to talk about a few charts. Because when you're looking at any sort of chart and you're looking at sort of like entry levels, obviously if you're just a new investor and you're thinking, right, you know what, new year, new me, I'm going to invest in crypto. I bought 4 coins, I've got $2,000 spent, I want to split it up. Yeah. You've done your research, you've done all that stuff, but the proof is in the pudding where you'd be like euphoric because your money's gone up. You've like made a load of money. You've actually made more here in this buy to this high to what you've made in terms of overall in the course of the year, which is, to some people, you can't quite fathom that. But there's obviously areas that you need to work on in terms of, you know, buying and holding isn't the be all and end all. It isn't. If you bought really, really early, but you're doing certain things within those parameters every single year, every single month, whatever, you will make more money over time because you're managing your portfolio. I know people that have bought Neo at like, you know, $7. They saw it go all the way to $200 and then they watched it go lower than their entire bag was worth when they first started. Imagine a 2-year period of going from low to high, then lower than the low. You just don't do it. So here's one strategy you can adopt. The one strategy that I would always recommend to people is a simple one. If you're investing, put at least 10 to 15% on an exchange for you to jump out of in periods of heavy movement, market cycles. If you go into the high time frame, even the daily, the 3-day time frame, you can see when you look at the chart, it moving in certain ways. You can use certain little indicators to help you govern what a trend is. Now, personally, I use a daily time frame. I look at the upswings of these EMAs and I look at structure, lower lows, higher highs, lower highs. Yeah, you get the picture. All those kind of sequences of going up and down in the market in a trend. XRP is one of the hardest ones to read in my opinion. It moves in channels, essentially range bound. It's weird. And the one thing you can do with any chart is put an EMA on there to see what it's doing. Now the one that I do recommend, by the way, if you go into MA, moving average, a one that is usually quite good, right? Usually quite good for long-term investment is a weighted moving average. You're probably thinking why? If you start on like the 30, for example, and now let me just remove the other one so you can see them. Because as you see this blue line, this blue line tends to help you in a situation where you know where the trend is. Now these run for a long time. As you can see here, this is XRP. You know, you can see how it's kind of swung up and it's carried on going up, right? It's carried on going up. Then eventually it becomes resistance. The 30 weighted moving average is actually quite a decent little number. And I've used it in the past for trailing stop losses on trades. You can use it on multiple time frames. But as an exit strategy, one of the things that people often talk about is when do you take money out and how much do you take out? Well, if you've holding for the long term, that's absolutely fine. Keep a good 80 to 85% away from the exchanges and ultimately look at trading these, okay? Why? Because your money's going to accumulate up and you're going to create more tokens over time. This is a time game, not a quick rich scheme, a time game. If you've got 4 assets that you can manage and you're looking at them, and if I do the exact same, if I go to the likes of Ethereum right now and you're looking at the same chart, it's the exact same. If I remove some of the noise here, you can see here, look at how it's trending up. Now, if you're looking at the overall structure of this on like a higher time frame, you will already automatically see, very, very simply, apologies for the dog there, that it's holding some sort of trend, but you can use different ones. You don't have to use a weighted moving average. It's all about finding what works for you. But when you start to see that it is solid below this line, it's actually resistance, you can maybe start looking at potentially, you know, maybe getting out for a bit just to chill your beans. But there's a win-win situation with this one. Why? If you've bought low, you've already got profit anyways. It doesn't matter. You're not losing out on anything. Long as you are in the game and you're thinking logically, well, if I bought at the start of the year and I'm up, say, 100, 200%, whatever, and I do take a bit of position out and it goes lower, you got to think of the gains that you're going to get. If you take out a position, right? Let me just try and get this right. There we go. So let's just say you've made a huge amount of money. Let's just say, for argument's sake, you bought down here and, you know, you've made 100% roughly, give or take. You've sold in and around where this candle's dumped, right? That's not too bad at all. But you automatically know that, well, actually, I've made profit. I've took some money out. I'm happy. And it dips lower, and it does dip quite a bit lower in this circumstance here, for example, just to give you a bit of an example here. It actually dips 20%. You can get an extra 20% more coins on your bag for free if you wanted to do that. That's how you'd play it. That's how I play it anyways. You don't have to do it that way. Looking at Chainlink again, simple sort of line. It's simple, but there's other ones, and I've mentioned these in other videos. You can use moving averages as well. If I go to MA, you know, exponential moving average, if you wanted to use one of those on the daily time frame, you can put like the 89, for example. The 89 is a Fibonacci number, and you can see very, very easily how this one ultimately does the exact same thing. But you want to try and get it kind of a bit more refined. In my opinion, you want to use a much quicker one. In terms of this, you may be looking at maybe the 55, or in some cases actually the 34. Why? It's a Fibonacci number, it's a bit tighter, and you can kind of get the governs of the trend, and this is a Fibonacci number. It's quite strong in terms of supports. As I say, if you're looking at this, if you're buying on the trend and you're just holding that trend as an investment, it's a long period of time. If you've only got so much on the exchange, you don't have to worry too much. Your overall position's in anyways. And yeah, when you look at that, let's just say you bought on this support level, for example, and you know you sold around where this has become rejection, you're up 400%, right, in fiat value, right? Happy days. But what happens? Well, actually it dumps. It dumps massively, and these dips are for buying. These dips here, that dip there is for buying. When you start seeing the fact that, well, there's actually a massive mega weekly level there, this is a bit more advanced, I know, but you can look at that thinking, hold on a minute, I sold up there at 400%. I'm now seeing this coin now at 43% lower than what I sold at. I'm going to bag an extra 43% here. Happy days. Imagine having 100 coins and you add in an extra 43 for free. You would, wouldn't you? So overall, that's how you, simple lines of management, right? Simple lines of management. Can't really go much deeper than that. And ultimately, it's very, very subjective when I do talk about it. But exit strategies can be the form of a trend. If you know that a trend is ending, go for it. You know, if you've got a 10% risk there, you've got 90% on an exchange, go for it. But we do need to add up these numbers of what it would be if you were still buying low and just sticking with your position, sticking with your guns. Now, there's ultimately a load of little swings here. I've already mentioned the COVID crash. What do you do in situations like that? Well, you have money left over. In situations like that, always have something on the side, because you can get a really good average in. If you've seen certain things and it's really, really good, well, you want to buy as low as you can. Dollar cost averaging. Simple lines of putting weekly and monthly support levels on your chart and looking at them. This is a weekly level. Why? It's significant for a number of reasons. This whole area here has become a very, very key weekly area. If I show you it on a weekly time frame, it's this. It's this level here becoming support. And what happens? It wicks all the way in and it zips back out. This is where you place your orders. This is where markets get buyers. Simple. So let's talk about what the totals are. Now, it is absolutely savage. It is. So if you started off with $500 in each coin, $2,000 outlay, and you were literally buying and holding right now from that time, and you've managed to oversee the COVID crash, your total sum would be savage. You would be in a much better position. So $2,000, it would actually equal, wait for it, 8,130, which is absolutely savage, which is essentially 2,000, actually no, it's not, 6,310 profit. Not bad, is it? So I often get the question, how much money do you need to put in the market? I keep knocking on my microphone, apologies. Not a lot. You know, when you think about the positions that these go in. Now, the one thing I will need to say, and I do need to talk about, bulls get wrecked. Not bears, bulls. Why? FOMO. Fear of missing out. as I've already said at the start of this video, a lot of altcoins still have a long way to go in terms of reach and potential. If you're buying Bitcoin, right, at these levels right now, expect pain at some point. But if you're clever and you've mapped out weekly levels, like for example here, 13,800 regions, 12,000 regions, even as low as down here. Crazy levels, right? Miles away, I know. But if you've got cash available and you rate Bitcoin, you want to hold as much Bitcoin as you possibly can, well, that's one way of doing it. You buy low. The next way to talk about this as well is profits from altcoins. I mentioned it. Well, when you look at the dominance chart, and I know it looks a bit mangled at the moment, when you look at this chart, if this does drop and you're holding altcoins, you sell into Bitcoin, as in when it goes down to like from 67 where it is right now, all the way down to 58, all the way down to maybe 52 or maybe even 40, that'd be crazy. You sell into Bitcoin because your Bitcoin Satoshi values of that altcoin would have increased massively. So don't just trade in USD. Look at what will happen if you trade it to Bitcoin. You may well create a lot of free Bitcoin there and you've never even noticed it. So it's a long video, I know. I hope you enjoyed it. Again, it's very, very subjective. Talk about the start of the year and what it could be, but that is from 4 coins buying at a certain point on a certain day to what the current prices are right now. A few little exit strategies in there, how to manage your portfolio, putting a little bit on an exchange there. But as I say, higher time frames, if you can see that the trend has turned bearish and there's an opportunity to take profit on your previous upswing when you're in the trend, you know, you'd be mad to pass up like a 30% dip of what you've already took as profit to accumulate more coins for the longer term. Easily, you can just put that back into your cold wallet, more coins for free. So, see you later.